In today's fast-paced world, many of us rely on personal loans to meet various financial needs. But what happens when the burden of high EMIs becomes too much to handle? That's where personal loan refinancing comes into play. Refinancing a personal loan involves replacing your existing loan with a new one that offers better interest rates, lower fees, and improved loan terms. It's a smart financial move for borrowers who want to save money and improve their loan repayment experience. By refinancing your personal loan, you can enjoy several benefits. First and foremost, you can secure a lower interest rate, resulting in reduced EMIs each month. This means more money in your pocket and less stress on your finances. Additionally, personal loan refinancing allows you to shorten the loan tenure, enabling you to save on long-term interest payments. With a higher monthly income, you can consider this option to pay off your loan faster and become debt-free sooner. When you choose to refinance your personal loan, a new lender takes over your existing loan. From that point forward, you'll make your future EMIs to the new lender. Wondering when it's the right time to refinance your personal loan? Here are a few scenarios to consider. 1. Attractive interest rates. If another lender offers a better interest rate than your current one, refinancing can help you lower your EMIs and save money. 2. Increased income. If your monthly income has significantly increased, you may want to pay off your loan faster by refinancing and shortening the loan tenure. 3. Improved credit score. Lenders often provide better loan terms when your credit or CIBIL score improves. Refinancing in such cases can help you take advantage of these improved terms. 4. Extended repayment tenure. Refinancing allows you to extend the repayment tenure, thereby reducing your monthly EMI burden. 5. Adding or removing a co-applicant. If you need to add or delete a co-applicant from your loan, refinancing provides an opportunity to modify your loan terms accordingly. In India, there are various types of refinancing available for personal loans, including rate and term refinancing, repaying the existing loan in full and obtaining a new loan with improved terms. Cash-out refinancing. With an asset serving as collateral, you can withdraw equity to secure a higher loan amount without selling the asset. Cash-in refinancing. Clearing the loan by making payments at a lower loan-to-value ratio or smaller installments. Streamline refinancing. A quick refinancing option for homeowners looking to benefit from low interest rates and escape adjustable rate mortgages. Personal loan refinancing can be a game changer, helping you save money, reduce financial stress, and achieve your financial goals faster. Take control of your loans and explore the possibilities of refinancing today.